I can't afford to buy a home because my credit isn't very good. So, Keara, is that true? What's the minimum credit score?
Yeah, it's a great question. So, from everyone here, what does everyone think the minimum credit score that's needed to buy a home?
650.
Okay, 650. What else are we thinking?
I know I heard from a lot of our own buyers, like they think that they have to have over 700 credit score.
Yeah.
Is that true,
Yeah, I'm
Keara?
thinking 675.
All right, so the lowest score actually to buy a home goes as low as 580. It goes even lower than that, but let's, for the purposes of this presentation, just stick with 580. Reason I say 580 is because 580 and above still allows you to do a low down payment, such as 3.5% down. We'll get into the different down payment methods and options in a couple slides from now. But yes, 580, even lower is possible in certain circumstances to get you into your home. So don't let credit hold you back. And we'll go into those different options shortly for sure.
Awesome. Thank you. So don't let credit stop you from purchasing a home. Okay. Now, Keara will walk us through the whole mortgage process. Keara, it's all you.
I'm excited. Let's do it. So, a big key piece in securing your home is the financing. So, unless you are paying all cash, you will need a mortgage to be able to secure the property. And it is my job to make sure we're finding the right fit for you. So, at a very high level, what is a mortgage broker? We're basically your personal shopper. So, instead of you having to go through multiple banks, multiple financial institutions, it can be very exhausting to speak to multiple people. We take the legwork out of it for you. We work with anywhere from 15 to 20 different lenders. We have over 10 different loan products. And basically, we take your situation, we package it up, we look at it, and then we make sure we're pairing you with the option that makes the most sense for you.
Okay.
All right, so this is the overall step-by-step what you can expect throughout the mortgage process. So we're going to touch on the pre-approval in a little bit. Once you get that letter, that's when the fun part starts. So you're going to work with an agent that's at Integrity Core, and they're going to help you navigate the home search. So you're going to look at homes, you're going to submit offers, you're going to maybe negotiate. You want to be working with an agent, like we said throughout this presentation, that's representing you. The seller's agent, keep in mind, is representing the seller. They have the best interest in mind of the seller. You need someone to have your best interest in mind and to protect you. As we said before, this is one of the biggest investments you're going to make in your lifetime. So you want to make sure that you're spending the money and you're working with a team that's strong to get you to the finish line. Once you have that accepted offer, you're going to work with the legal team to draw up a contract. If you're buying in New York, you're going to work with an attorney. And then the loan is going to come back and we're going to start the loan process. We take the baton, we get the mortgage started, and we order something called the appraisal. To keep it very brief, they are basically an outside source, an objective third party that's going to go to the home, and they're going to indicate what the value is of the home, not based on what we think it is, not based on what the seller, not based on what Zillow thinks it is. It's going to be based on the market comparables. Do we have a question?
Hold on 1 second. Yeah. No, I think we're good, Keara.
Okay. Yeah, so the appraisal is basically just a third party that's going to confirm the value of the home based on market conditions and what has recently sold in that area with similar homes. Once we go through underwriting, they're going to request a couple of additional items to verify your income, your assets, your credit. Once all is said and done, you're going to receive something called the clear to close. That's like your golden ticket. And from there, the attorneys on each side are going to coordinate a closing date with the bank attorney. So there's 3 attorneys involved. Each of them are important for different reasons, but at the end, they all coordinate together to set that final closing date where you're going to sign and get your keys and bring your funds for closing.
And then you're going to invite everybody over for barbecue. Next.
We're hungry.
That seems challenging.
So, pre-approval FAQ. So to keep it very short and simple, it actually takes less than 24 hours to get a pre-approval once all of your documents are in. What do we review? So we're looking at your income. This is how you get paid on a biweekly, bi-monthly, or monthly basis. So we typically look at pay stubs. If you're self-employed, a little bit different. We're going to look at your tax returns. We're going to look at your assets. So anything you're using for your down payment and closing costs, this can come from savings, stocks. Do you have a retirement account? You actually can use crypto now, believe it or not. We're gonna verify this to make sure that you have it ready to go for that down payment and those closing costs. We do a credit review. It's a soft pull up front, meaning that there's zero impact on your score. A big myth is having your credit pulled when you're going through the mortgage process is super detrimental. It is actually not true. The max impact that it has is 3 points, and after 30 days it returns back to its normal levels because the bureaus will see this as a financing inquiry. So paying your credit cards late, paying your car late, paying anything late is going to have the biggest drop in credit score. Having a mortgage inquiry on your credit report is actually only going to drop it 2 to 3 points, and like we said, it will go back up after 30 days. So this is like the basics of the pre-approval. Once we have these items, we'll do a review, and then we'll set up a consultation to go over your pre-approval so that you know exactly what you're approved for, your down payment, and then your agent's going to take you out to start looking for homes.
Okay, we have a question from Guillermo. Am I saying his
Yeah,
name
yes.
right?
You can call me G. That's
Okay,
easy. Yeah. And Kiara, yes. So if let's say if we delay on the mortgage just for 1 day, is there is gonna be a big fee that we have to pay toward the mortgage?
You're saying if you make like your mortgage payment is like delayed in payment, making like a late payment?
Right.
Yeah, so this is something that I would strongly advise against. For exactly what I was saying before, like a late credit card payment, a late mortgage payment, that's really going to have a strong impact on your credit score because the credit bureaus are going to look at history and your ability to pay your bills on time. So mortgage is definitely going to be one of those. So if there's ever a circumstance where you cannot pay your mortgage, it's better to speak with your bank about doing a modification, and speaking to the servicer about doing modifying the mortgage before you miss any payments.
Right. Got it. Thank you for the clarity.
Yeah, of course.
Awesome. Okay, loan types and monthly down payments.
All right, awesome. So these are the two basics. There's a lot of other loan programs, but the basic ones are conventional. This is Fannie Mae, Freddie Mac, and these are going to be you can actually do, and we'll go through the down payments, but conventional has a lot of great first-time buyer incentives. Same thing with FHA. The key difference is FHA is Federal Housing Administration, so this is a government-based loan, and both allow for lower down payments. They both just have a little bit of nuances to each. To keep it very brief, FHA is going to allow for a little bit of a lower credit score, so that 580, that even 550 credit score, that's going to work with FHA. Conventional, you really want to be at 620 and above, and the other key difference is going to be debt. So if you have a higher debt amount, we always look at your debt compared to your income. If your debt is a little bit higher, sometimes it makes more sense to go FHA because the FHA loans are a little bit more flexible when it comes to debt compared to your income, whereas conventional, you need to have a little bit of a lower debt profile.
Okay.
All
Down
right.
payments?
So down payments. So with FHA, even with a 580 score, the best thing about this program is you can do 3.5% down. And a myth is that everyone thinks you have to be a first-time buyer to use this loan. It's not true. You can be a second-time buyer, and you can still use an FHA loan. You just have to be living in the property as your primary residence. And you can use 3.5% down, and this works for multifamily. So 2-family, 3-family, 4-family, this works for. even with a low down payment. If we slide down to conventional, we can still do a low down payment, 3% down. Lenders typically want to see 640 and above with doing 3% down. Can we do lower than 640? Yes. As a rule of thumb, we really want to see above a 640 to keep that to keep you in the qualification range for 3% down. With conventional, you can go as low as 5 on a multifamily. Loans for veterans allow 0% down. And there's additional benefits with VA loans, such as no mortgage insurance. If you are a veteran or know a veteran that may be looking, we can set up a consultation to go over further benefits for these loans. And if you are below 580, you still have the ability to buy a home. You just need a little bit of a higher down payment at 10%, but it's still an option for you, even with a lower credit score. And we have the ability to help you increase that credit score as well, so you don't have to feel stuck. Buying real estate is a long-term play. This is a marathon. It's not a sprint. So even if you're not ready in this moment, we have the ability to help you get there in, different ways and different shapes and forms.
Wow, this really busts some myths, because everybody thinks it has to be over 700, but it's really like 580. That's like a huge difference, right?
Mm-hmm.
Awesome. Self-employed.
Is anyone on the call self-employed? Esther, raise your hand.
I'm self-employed.
So, great, amazing. We have more programs. So, we're not going to go into details of each, but everyone, just to be clear, we have a lot of different programs if you're self-employed or even if you're an investor. These are stated income products, meaning you're not going to be using your typical pay stubs, W-2 forms. These products you're going to use different types of paperwork, such as your bank statements, such as a profit and loss statement. It depends on the house and it depends on the individual, but we do have a wide variety of products for self-employed individuals. So a lot of times business owners who are bringing in all cash, if they own, a gas station or an ice cream store, for example, sometimes they're very heavily cash businesses and people automatically think we cannot get a mortgage. It's not going to happen. It's a complete myth. We have a lot of really good programs. We actually just did one with Esther's client. She was a business owner. She qualified solely off her business bank statements. We did not use her tax returns or she didn't have pay stubs, but we went off for her business bank statements to qualify her, and she was able to buy a house just recently in Plainview. So a lot of good programs, and we can set up a consultation for anyone that needs.